I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me.
I got rich when I understood this. Warren Buffett. Warren Buffett, known as one of the best investors ever, has an incredible story that shows the importance of understanding investing basics. His journey from a young stock enthusiast to a billionaire business magnate offers many valuable lessons. Buffett himself explains how changing his mindset revolutionized his investing approach and led to his great success. The early days, learning the wrong way.
When I was 11, I picked stocks. I had the whole wrong idea.
Buffett recalls.
I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them.
Buffett's early interest in the stock market led him to focus on technical analysis, thinking success came from predicting market movements. He carefully charted stock prices, analyzed patterns, and read books on technical analysis, believing past market behavior could forecast the future. However, this approach didn't work as well as he hoped. The turning point came when he discovered Benjamin Graham's work. Graham, a famous investor and economist, had a different philosophy. Instead of focusing on stock price movements, Graham promoted value investing, which emphasizes fundamental analysis and the intrinsic value of companies. Buffett was greatly influenced by Graham's book, The Intelligent Investor. The idea of buying undervalued stocks based on their true worth struck a chord with him. Graham taught Buffett that investing should be about acquiring parts of good businesses at reasonable prices, not just speculating on market trends. At Columbia Business School, under Graham's mentorship, Buffett learned to evaluate companies by looking at their financial health, earnings potential, and competitive position. This change in perspective formed the basis of Buffett's investment philosophy. He began to seek long-term value rather than short-term gains, focusing on companies with strong fundamentals that were temporarily undervalued. Buffett's shift from technical analysis to value investing was a crucial moment in his career. It taught him the importance of understanding the core principles of investing rather than relying on market speculation. This approach was not only more effective, but also suited Buffett's analytical and strategic mindset. The turning point, discovering Benjamin Graham.
And then I read Ben Graham, when I was 19 or 20.
Buffett continues.
I read the book, The Intelligent Investor. From that point, I never bought another stock. I bought businesses.
This revelation was profound. Buffett understood that he had been focusing on the wrong aspects of investing. Graham's teachings emphasized the importance of analyzing the intrinsic value of businesses rather than speculating on stock price movements. This shift in perspective led Buffett to view stocks not as mere pieces of paper to be traded, but as ownership stakes in real businesses. Graham's philosophy, known as value investing, introduced Buffett to the concept of buying undervalued companies with strong fundamentals and holding them for the long term. This approach was rooted in the belief that the market often misprices securities in the short run, but their true value will be recognized over time. For Buffett, this was a game changer. It meant focusing on the actual performance and potential of companies rather than being swayed by market trends and fluctuations. The Intelligent Investor provided Buffett with a systematic framework for evaluating investments. Graham's principles of margin of safety, intrinsic value, and the distinction between investment and speculation resonated deeply with him. Buffett adopted these principles and integrated them into his own investment strategy, leading to a more disciplined and rational approach. One of the key concepts that Buffett learned from Graham was the idea of the margin of safety. This principle advocates for investing in securities that are priced significantly below their intrinsic value, providing a cushion against errors in analysis or unforeseen market conditions. This conservative approach appealed to Buffett's analytical nature and his desire for minimizing risk while maximizing potential returns. Surrounding yourself with the right people.
I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me.
Buffett notes, Buffett's success is not solely due to his analytical skills, but also his ability to build a supportive network. Surrounding himself with individuals who share his values and work ethic has been crucial to his achievements. This principle extends beyond investing to all areas of life, emphasizing the importance of positive and constructive relationships. Buffett's approach to building a network starts with choosing people who are not only competent, but also share his ethical standards and passion for excellence. He believes that the character and integrity of the people around you are as important as their professional skills. This belief is reflected in his long-term partnerships, most notably with Charlie Munger, his vice chairman at Berkshire Hathaway. Munger's sharp intellect, ethical compass, and complementary skill set have been instrumental in Buffett's decision-making process. The importance of the right orientation.
90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week.
Buffett explains.
I think about what the company's going to be worth 10 or 20 years from now. And I hope it goes down when I buy it because I'll buy more.
Buffett's ability to remain calm and even optimistic during market downturns sets him apart. Viewing stock price declines as opportunities to buy more of a good business at a lower price demonstrates his commitment to long-term value creation. For Buffett, the intrinsic value of a company matters more than its short-term stock price fluctuations. He emphasizes understanding the fundamentals of the businesses he invests in, including their competitive advantages, management quality, and potential for future growth. This approach requires thorough research, patience, and a strong conviction in the investment thesis. By focusing on the long-term prospects of a company, Buffett minimizes the emotional impact of market volatility. His perspective allows him to make rational decisions based on the underlying value of the assets rather than being swayed by market sentiment. This disciplined approach helps him to capitalize on opportunities that others might miss, especially during periods of market panic when prices are depressed. Buffett's strategy underscores the importance of having the right orientation towards investing. It's not about chasing quick profits or reacting to market noise. It's about building wealth steadily over time by investing in high-quality businesses. This mindset is not only crucial for financial success, but also for maintaining emotional well-being in the often turbulent world of investing. Investors can learn from Buffett's example by cultivating patience, conducting diligent research, and maintaining a long-term perspective. By doing so, they can better navigate market fluctuations, seize opportunities during downturns, and ultimately achieve more consistent and rewarding investment outcomes. Investing in American businesses.
I've owned a piece of American business, at least 80% at all times. I don't want to own anything else.
Buffett has always believed strongly in the strength and potential of American businesses. He sees his investments as parts of the country's economic engine, helping to grow and prosper the nation. This view shows his deep trust in American companies and his patriotic feelings. Buffett's faith in American businesses is based on several key ideas. First, he understands the dynamic nature of the U.S. economy, fueled by a culture of entrepreneurship and innovation. American companies, both large and small, have shown they can adapt and thrive in tough times, ensuring long-term growth. Second, Buffett values the U.S. legal and regulatory system, which supports business growth and protects investors. This stability and predictability are crucial for long-term investments. Third, Buffett respects the quality of American corporate management. He believes American business leaders are among the best, with the vision, skills, and integrity needed for long-term success. His investment choices often depend on the leadership of a company, highlighting his belief in strong management. Finding happiness in investing.
What brings you the happiness?
Buffett muses.
What makes me happiest is what I'm doing.
Buffett's passion for investing and belief in his methods bring him great joy. He focuses on buying quality businesses and holding them long-term, which matches his personal values and goals. His satisfaction comes from several important aspects of his investment philosophy. First, Buffett loves learning and has a strong curiosity. He enjoys researching businesses, analyzing their finances, and assessing their growth potential. This engagement keeps him motivated and turns what others might find tedious into a fulfilling experience. Also, Buffett's confidence in his investment strategy adds to his happiness. He has developed a clear, disciplined approach based on solid principles and experience. This confidence comes from knowing his methods have worked well over time, allowing him to invest calmly without the stress of market ups and downs. Buffett's investment philosophy also reflects his personal values, especially long-term thinking and ethical behavior. By investing in businesses he believes in and holding them for the long term, he aligns his financial choices with his life principles, creating a sense of purpose and integrity in his work. This alignment further enhances his overall happiness. The importance of a long-term perspective.
If you want to invest for the long term,
His index.
and it's the S&P 500 index.
Right.
Buffett's advice to investors is to focus on broad-based, low-cost index funds, particularly the S&P 500. This strategy minimizes the risks associated with trying to pick individual stocks or time the market, providing a simple and effective way to participate in the growth of the American economy. Buffett's endorsement of the S&P 500 index fund is rooted in the importance of a long-term perspective. By investing in a diversified portfolio of the largest and most successful companies in the U.S., investors can benefit from the overall growth and prosperity of the economy. The S&P 500 represents a broad cross-section of industries, offering exposure to a wide range of economic activities and reducing the risk associated with investing in individual companies or sectors. This long-term approach aligns with Buffett's belief in the power of compounding. Over time, the returns generated by the S&P 500 have historically outperformed most actively managed funds and individual stock picks. By consistently investing in the index, investors can harness the growth potential of the market without the need for extensive research or market timing. The importance of learning and adaptability. Throughout his career, Buffett has demonstrated an insatiable appetite for learning. He spends a significant portion of his day reading, absorbing information from a wide range of sources. This commitment to continuous learning has allowed him to adapt his strategies in response to changing market conditions and new opportunities. Buffett's adaptability is evident in his embrace of technology stocks in recent years. Historically, he avoided the tech sector, citing a lack of understanding. However, as his knowledge grew, he recognized the value and potential of companies like Apple, which has become one of Berkshire Hathaway's largest holdings. Staying grounded and humble, despite his immense wealth and success, Buffett remains remarkably grounded and humble. He lives in the same modest house in Omaha, Nebraska, that he bought in 1958, drives a regular car, and enjoys simple pleasures like playing bridge and eating at his favorite local diner. This humility and frugality reflect his belief that true wealth is not measured by material possessions, but by the quality of one's life and relationships. Buffett's humility extends to his public persona. He is known for his folksy wisdom and straightforward communication style, making complex financial concepts accessible to a broad audience. His annual letters to Berkshire Hathaway shareholders are highly anticipated for their insights and wit, providing valuable lessons on investing, business management, and life. Final thoughts. The wisdom of Warren Buffett. Warren Buffett's journey from a young boy with a fascination for stocks to one of the world's most successful and respected investors is a testament to the power of understanding fundamental principles, maintaining a long-term perspective, and adhering to ethical values. His wisdom, humility, and relentless pursuit of knowledge offer invaluable lessons for anyone seeking to achieve success and fulfillment in their endeavors. Buffett's legacy is not just about the billions he has amassed, but about the principles and values he has championed throughout his life. By focusing on the intrinsic value of businesses, investing in human capital, and embracing a mindset of continuous learning and ethical leadership, Warren Buffett has set a timeless example for investors and individuals worldwide. The power of long-term thinking. A central theme in Buffett's investment philosophy is the importance of long-term thinking. He believes that short-term market fluctuations are largely irrelevant and that the true value of an investment lies in its long-term potential. This perspective allows him to remain patient and steadfast, even during periods of market turbulence. Buffett's long-term mindset is evident in his famous analogy of investing as, he explains that just as a farmer doesn't obsess over the daily fluctuations in the price of corn, investors should focus on the long-term health and productivity of their investments rather than short-term market movements. The influence of mentors. Mentorship has played a significant role in Buffett's development as an investor. His relationship with Benjamin Graham provided him with a solid foundation in value investing, while his partnership with Charlie Munger helped refine and evolve his investment philosophy. Buffett credits these mentors with shaping his thinking and guiding his career. Buffett's willingness to learn from others and seek guidance from experienced mentors highlights the importance of mentorship in personal and professional growth. It underscores the value of surrounding oneself with knowledgeable and supportive individuals who can offer valuable insights and advice. Warren Buffett's journey from a young stock picker to one of the wealthiest individuals in the world is a testament to the power of understanding the fundamentals of investing. His story offers valuable lessons in the importance of focusing on intrinsic value, maintaining a long-term perspective, and trusting in the resilience and potential of the American economy. Buffett's wisdom is accessible to everyone, emphasizing that success in investing doesn't require genius-level intelligence or complex strategies. Instead, it demands the right mindset, patience, consistency, and a commitment to continuous learning. By following these principles, anyone can build wealth and find fulfillment in their endeavors, just as Buffett has done. For more insights and stories about investing and personal finance, subscribe to our channel.